Hello everyone, I'm Svetlana Sagrian, an economist at the Central Bank of Armenia and a Level 1 student at the Global Forecasting School. Today I'll be discussing some of the latest developments in China's economy, the implications for the global economic outlook, and the concerns that many analysts have raised about the recent measures taken by the Chinese authorities. China's economy has been under significant pressure due to structural issues in the property market, sluggish consumer confidence, and the need to balance growth with managing financial risks. The recent slowdown has led to the first major coordinated monetary easing in recent years. This includes significant cuts to the reserve requirement ratio, RRR, and interest rates, along with property-related policy adjustments, such as reducing mortgage rates and lowering down payment ratios. While these measures are aimed at boosting the economy, many analysts remain cautious. The People's Bank of China's PBOC liquidity injections, while substantial, are seen as part of a broader effort to stabilize markets rather than providing a long-term solution. One of the most concerning aspects is the massive wealth destruction, particularly in the property sector. Bank of America estimates that since 2021, the property sector alone has lost RMB 60 trillion, approximately 8.6 trillion. This has had a severe impact on consumer confidence, business sentiment, and the broader economy. With property prices continuing to fall, the crisis has become a key focus for policymakers. Recent measures were intended to support this sector and restore confidence, but the scale of the problem remains daunting. The Chinese government has introduced a number of initiatives to address these challenges. These include cutting the RRR and interest rates to increase liquidity, providing mortgage rate reductions to ease the burden on households, lowering down payment requirements to encourage property purchases, implementing swap and relending facilities to boost stock market liquidity. Despite these efforts, many commentators and analysts, including Bank of America, remain concerned that these policies will not be sufficient to fully stabilize the property market and restore consumer confidence. There are also growing concerns that China is not yet out of the woods, and the potential for further economic instability remains. The question now is whether these measures will provide enough support to sustain confidence in China's economic regime. Analysts are warning that while these actions may provide short-term relief, significant risks remain, particularly as consumer confidence has been deeply shaken by recent events. There's a clear understanding that more needs to be done, particularly in the area of fiscal policy, to stimulate demand and address the underlying structural issues in the property sector. The road ahead for China's recovery is uncertain, and it will take time to assess the full impact of these measures. That's all for today's discussion. If you enjoyed this video and would like to support the Better Policy Project and help promote economic and financial literacy, please hit the subscribe and like buttons. At the Better Policy Project and the Global Forecasting School, we are committed to producing videos on a daily basis to keep global policy makers and analysts up to date with the best analysis, consistent with the standards employed by state-of-the-art central banks. The Global Forecasting School has 2 scholarships available for students interested in learning the art and science of supporting policy analysis and forecasting in a central bank environment. You can find out more at the Better Policy Project website. Thank you for your attention, and see you in the next video.